Hi there, welcome to my channel. If this is your first time stopping by my channel, please subscribe to my channel, hit the like button, share my video. Thanks so much. As you guys can see, here's an update on my portfolio. We're doing very well today. The market is up today after rate cuts, and I'm in dividends, still making about $5,700 per month in dividends. If you guys have been watching my videos, my goal is to reach $10,000 per month. And there is some analytics here. It gives an estimation of when I could potentially reach $10,000 a month, which would be $120,000 on an annual basis. And according to this information, it should be just a little bit over 2 years to reach $10,000 a month. And so that's what I'm working towards, reaching $10,000 a month. That's one of my goals here. And hopefully you guys can subscribe and watch me make it to $10,000 a month from my Robinhood portfolio. And so let's go over to my actual Robinhood portfolio. And here we are. We're at, let's open that up. We're at 247,961. And so just to mention it, I believe it was sometime this week. I think it was on Monday or Tuesday. I actually withdrew $3,900. So I believe it was on Tuesday, Wednesday. My portfolio was worth $244, and now we're almost back at $247. Although I did put in $1,000, my entire paycheck for the week, $1,000. I'm basically investing $4,000 per month. And so let me show you guys what I ended up buying. I ended up buying SPLV. I spoke about that ETF in my previous video, SPLV. And the reason why I bought $1,000 worth of SPLV is not for the dividend, because although it does pay a monthly dividend, it only pays about 10 cents per month, which is very low. But the primary reasons why I decided to buy this ETF is for the low volatility. And so if we look in the past week, past month, past 3 months, past year to date, one of the primary reasons why I bought this is, if you look here, this was the Liberation Day, when the president announced the tariffs. And as you guys can see, this only went down by 3.10%. And so far it's been going sideways for the rest of the year, since April. Even on the rate cut announcement, just before the rate cuts, the market was pretty much taking a dive. And so that was on the 17th. So we're right here. So as you guys can see, on the 17th, when rate cuts were about to be announced, this basically was just going sideways, and it pumped a little bit at the end of the day, while the actual S&P 500 for the most part was really going down a lot more. For example, here's some SPY past week. We go to the 17th. It's right here, right in here. This was the 17th. So as you guys can see, it started off the day a little bit high, but then started to go down. And this was the announcement of the official announcement of the rate cut at 11 o'clock. So there was a pump, but then soon after, a sell-off. And of course now the market's just been pumping basically. And so I was reading that going forward here, because of this, I was reading here on Grok, asking the question, what does it mean when rates are cut at all-time highs in the market? And according to this, here it says the S&P 500 has risen 100% of similar instances over the following 12 months, with average gains of around 11%. So, well, let me read it from the very beginning. It says the rate cuts generally act as a tailwind for equities by reducing borrowing costs, boosting corporate profits and encouraging risk-taking. Historically, when the Fed initiates cuts near market highs, as it did here, the S&P 500 has risen in 100% of similar instances over the following 12 months, with an average gain of around 11%. So as you guys can see, the forecast here for the market is that potentially we could see an 11% rise, an 11% gain over the next 12 months. It's happened 100% of the time. Every time the Fed cuts rates at all-time highs, 100% of the time, markets continue to rally. And so, as we see today, I'll open this back up again. We are seeing that the market is rallying, right? I'm currently up 0.88%. The money that I took out of my account to pay for a credit card bill, which was $3,900, I've almost got that back just in appreciation, which is really great. And so another thing I wanted to talk to you guys about is QQQI and SPY-I, two of my largest holdings. What I wanted to show you guys was the 52-week high. As you guys can see here on stats, it tells you the volume, what price did open at today, today's low, if you guys can see it, and then the 52-week high. According to this information, the 52-week high is $54.64. Currently, we are at $54.46. So, is QQQI soon to surpass its 52-week high? I think it's getting pretty close to potentially being $55 per share. I think it's possible to hit $55 per share because it's been trending up, and with that rate cut and the the 100% occurrence that 100% of the time when rate cuts come at market highs, the market just continues to rally for the next 12 months with the possibility of an 11% gain. So 11% gain from here. Don't really know what the price will be, but I'm pretty sure $55 is soon to be reached here for QQQI. At least that's what I think is going to happen here. Also, the same thing with SPY-I. If we scroll down here to the stats, as you guys can see here, the 52-week high is $52.78. We're currently at $52.48. So will SPY-I reach $53? I'm assuming that it will hit $53 and probably continue to appreciate for the rest of the year if nothing really bad happens to the economy. And so still getting paid dividends. As a matter of fact, these two, SPY-I and QQQI, should be paying dividends towards the end of the month here. And I'm really looking forward to that. As you guys know, I have mentioned that I kind of sold off a lot of my YieldMax ETFs. I do own still Ulti and YMAX. So currently I'll still be holding Ulti and YMAX. I may sell a little bit of them to buy a WPay, which I'm still waiting for WPay to be at 30% margin maintenance. But it's currently still 100%. So I'm waiting, although the price is going up. If anybody bought it at the very beginning, they're doing well, right? I'm pretty sure they're happy if you bought it from the very beginning, because in the past month here, it's up 7.42%, which is really good since it just came out. And so I'm just waiting to be able to buy this once the margin maintenance is lowered to hopefully 30% at least. The ideal, of course, would be 25%, just like SPY-I and QQQI are both 25%. If we scroll up here, these are both 25%, as you guys can see here. And so, yeah, this is an update on my portfolio. And let's take a look at the Fear and Greed Index. As you guys can see here, we're currently in greed by 62 points. All of the major indexes are in the green. The Dow Jones, the S&P 500, and the NASDAQ. And so, yeah, everything seems to be continuing in the bull rally. And let's open this back up again. And of course, I am losing money on my puts, but that's okay. These puts, as I showed you in my previous video, are for insurance only. Now, I was looking into buying leaps. The leap basically works in the opposite direction. If the market goes up, the leap is going to go up. So let me show you guys kind of a little bit of an idea of how a leap works. I was learning about it myself this morning. Although I've never purchased a leap, but this is the idea of a leap. Let's go to trade. Let's go to trade options. Okay, if you guys see here, the long call is basically the leap. Okay, so let's open this up. And so the reason it's called a leap is because you buy it at least 1 year out. So as you guys can see here, I'm scrolling at these dates. So if you do 1 year, well, this is basically until the end of the year, 120 days. So this probably wouldn't be considered a leap. I think a leap is considered at least 12 months. But for example, here's the idea with leaps. A leap is basically the opposite of a put, but you still have to pay you pay a premium to have the long call. Okay, so here at the 665 price, right? The current actual price per share is 663 and 16 cents. So all these are based on 100. As you guys can see here, it's $23.99 for the 665 long call. So times 100, well, it's now 24 again. So if we go over to the calculator, 100 times 24 is $2,400, right? So for $2,400, you get control of basically you have control of 100 shares of SPY. And so you don't actually have to buy 100 shares, but you have control of 100 shares if you buy this option here, this long call. So now you could actually just buy 100 shares of SPY, which would cost at the current price $663. Okay, 100 shares. Let's figure that out here. 100 shares at 663. That would cost you $66,300 to buy 100 shares of SPY. But to control 100 shares of SPY through that long call, that would only cost you 2,400 shares. Now, why would you want to do that? The most you can potentially lose on this long call is what you paid, the premium you pay, which is $2,400. You can lose $2,400 on this long call. But of course, if the market continues to rally, which I guess it's, none of this is financial advice. I'm not a financial advisor, but I assume that the market is going to continue to rally. And so if the price, you bought a call at 665, let's say the price goes to, I don't know, by the end of the year, let's say it's $700, $720, okay? So you bought it at 665. The break even is 668 and 78 cents. Hopefully you guys can see that here. There's it says break even. It also gives you the percentage to break even. So 668.78. That'll be the break even price. So let's say the break-even price is what was it, 688? Yes, 688.77. 688 point sorry, 0.77 minus 720. So it's 31. So the price difference, let's say that you did end up buying that long call. It cost you $2,400 to have that long call. That expires basically at the end of the year, right? January 2026. And let's say that the price of SPY, or the value of SPY, is $720, which is what I put here, right? Yes, $720. So the price difference in between the call that you bought and the $720 is $31.23. So times 100. You would make $3,123 if you were to do that. So by then you can sell that call, you can sell it again, and somebody buys it, and they're going to pay you $3,123. So you can make some money doing that. So I was looking into that. I may potentially be doing that, maybe. I don't know. That would cost $2,400. So would it be better just to buy an ETF, for $2,400, or would it be better to buy a long call for $2,400? Another one that I was looking at that was very interesting. Same idea, long call, but a long call on UPRO. UPRO is the 3x leveraged SPY ETF, which is this one here. I own some. On you, this would be a little bit less of an expensive premium. Roughly, it would be about $800 of a premium for about the same expiration date, and the same amount of growth. And you could make them. I believe it was about $3,000. By the time it's all said and done, you could potentially make $3,000. And basically, you'd be controlling 100 shares of UPRO, which 100 shares of UPRO is going to cost you, at least at the current price, I'd say over $10,000. So for $800, you can control 100 shares of UPRO, which would really cost over $10,000 at the current price. So I don't know if I'm going to be doing that. I may be doing that because it may be a way to kind of like play both the upside and the downside, right? I'm buying a put and buying a long, so that you got control of both directions. So your portfolio, whether it goes down or whether it goes up, you're going to make some money. So yeah, I've been looking into that. I may be doing that here moving forward, potentially. So thanks so much for watching. Please do me a favor, like, share, and subscribe to my channel. I really would appreciate it. And thank you so much for watching. You guys have a great day. God bless. We'll catch you in the next video. Bye.